Morning. How are we all doing? Morning all. Morning Peter. Morning Ian. JC. Kennelly. Martin. Fire. Virginia. Nicholas. David. How are we doing? So today is FOMC day. We've got lots of stocks having earnings today and yesterday. So it's going to be a pretty busy one. So we'll run through everything as usual with the news, etc. Have a look at what stocks have had earnings and just see what's going on. Morning, Jerry, Kanzai, John, Burke, Christian, Lenz. How we doing? New morning, new opportunity. Exactly. Good positive mental attitude. PMA. That's what you want. Morning, Neo. Just eyeing up this Euro Swiss. Morning, Monkey. So the Euro Swiss basically is still coming down. Done a bit more drawdown control on it this morning. So that position and that position did a bit of DD control yesterday. We had a big ADR drop on it yesterday. Done a little bit more this morning. So it's just not coming back at the moment. This move kind of started up there, and as you can see, it's just not had. It had a little bit of a pullback there. I had an out on it here. Didn't quite take it. So was expecting a move up into here, basically, and obviously some positivity off of the interest rate rise we got coming tomorrow, but they don't seem interested in it. So I'm putting an aggressive drawdown control position on it this morning. So as you can see, the aggressive position is here, which is 2.5 lots. So total lot size on this is 4.4. So I'm putting 2.5 on. The average isn't far away. I'm not worried about it, really. It's just over 125 ADR away. But that will bring it back down within ADR. So I can get some profit on it and do a little bit more drawdown control just to, it's only at 2.3%. It's not a massive problem at the moment. But what I'm worried about is tomorrow we've got the Euro rate announcement tomorrow morning, which is 4.25. I can't see that we're not going to get 4.25. The Lagarde is not going to drop it. What I am worried about is the market having already factored that 4.25 in and having a negative reaction to it. So what I want to try and do today, if possible, so I'm using the M15 reversal alert, which is there. So when that reversal alert triggers, assuming it does, obviously, I'm going to take an aggressive move and see if we can get a push today. If we can get a pullback on this move today, that will give me an opportunity to use that drawdown control. Use that aggressive position to do a little drawdown control just to reduce the contract size, the lot size down on it, in case it dumps. If it does dump tomorrow, obviously, I want to be having less exposure on it. That's all. So just looking to get a little bit of an aggressive one on there this morning or today, if possible. If it moves, we'll wait and see. It's FOMC day, and quite often on FOMC day, all we get is rotation. Because the market's waiting for FOMC. It doesn't want to put any money in or out of any currencies until it knows what the exchange rate is going to be for, the interest rate is going to be for the US dollar. So this morning we've had the CPI figures for Australia, which was lower than expected, which is great. Year on year was as expected, but quarterly they've made a better advance than they were anticipating, which is fantastic. So that's good for the Australians, but negative for the Australian dollar. So we've had a little bit of a drop on the Aussie pairs, nothing dramatic. So we had the initial knee-jerk reaction off of the news, which they're pulling back into now. So hopefully what we'll see is a continuation short on that. So opportunities to sell the Aussie dollar today. Across the board. I've got an Aussie New Zealand on, which just got into break even this morning. So that's going in the right direction. TPs are down in that propulsion gap there. So there is potential drop on the Australian dollar. Apart from that, we've got no other news today. We've got home sales this afternoon, which won't do anything. It's all about FOMC. So 7 o'clock tonight, it's the FOMC. It's basically the interest rates for the US dollar, which are going up to 5.5. So what you'll get is you'll get a knee-jerk reaction off of that 5.5 when we get it, which is usually some kind of whipsaw or a big bullish candle. Then it will just fade away if it does that. And then at 7:30, we get the press conference. So at 7:30, that is when the Fed are going to outline their forward guidance for the US dollar for interest rates moving forward. And that is where we're going to find out whether we're going to get the 5.75 or they're anticipating requiring more, depending on what inflation's been doing and how they see it contracting. So what tends to happen is around about 7:45 to 8 o'clock, the market will take off. So in here, we will have the statement, we will have the Fed saying what they want, what they think is going to happen. After that, we then get the press questioning them and pushing them on those items to try and find out a little bit of information, which is going to help with forward guidance in the market. So 7:45 to 8, somewhere around there, you tend to get that rally or dump start. So that's this evening. So today, we will probably find, as I say, a lot of rotational movement. The Australian dollar might move today quite nicely, but everything else you'll probably find, if it does move up, it'll probably come back down again, or it'll just do that. So be a rubbish day today. No ADRs, as you can see. RSIs are the same as before. Euro Swiss, Euro Pound, Euro US dollar. So exactly the same as we looked at yesterday. Nothing's moving. It's all sideways. We're waiting for FOMC. And then obviously after that, we've got Euro tomorrow, and then the ECB press conference. We've got GDP and unemployment for the US as well. So it's all kicking off. We got 2 minutes to the news. To the open. It's the 26th. Yesterday we had aftermarket. We had Google, Microsoft, Visa, and Snap. We've got AT&T, ADP, Boeing, CME, Coke, and Thermo before the market opens today. So lots of big names in there. We're going to have a busy afternoon, I think, on the US Open. Aftermarket today, we've got Facebook, Quantum, ServiceNow. I don't know who they are. But we've got them aftermarket, and then we've got McDonald's, MasterCard, and a load of others. So, you know, we're bang in the middle of the earnings fortnight now. Today is the first proper big day. So we might get a lot of pre-market movement. We might get a lot of movement in the NASDAQ and the Dow today. So be prepared. If you want to take pre-market, take some Globex trades, we might get a decent move today on these US indices, because when the Frankfurt exchange opens, they'll start to buy and sell the sectors, and obviously it will kick off. Okay, so markets open. DAX is going short. I'm just looking at an opportunity on the Dow to go short or long on the 15-minute break. So I'm watching this range on the Dow this morning because it's nice and flat. Very simple range break, up or down. Okay, so we've gone short on the DAX. So if you took the 5-minute pre-market, that was really close. You would have got slipped, definitely would have got slipped on that today. You wouldn't have got your entry there. You'd have got your entry somewhere around there. The 15-minute is the same candle. So if you took that break down today, well done. You're in, you're out, you're done. At the 5-minute today, depending where you got slipped to, you've made 2R, no problem. If you've taken the 15, you're on your way to 1.5, depending on where you got slipped to, obviously. I haven't taken that because it's too close to the lows, but where's my platform? There we go. So DAX, let's have a look at where we're potentially off to. It's a really tricky ascending wedge we're in at the moment. So that's the formation that we're in right now. These typically break to the upside. It's bullish pennant or bullish wedge. So the earnings that we have had, obviously are US earnings, but they do affect the sectors which are traded in the DAX as well. So we've had a bit of negative move off of the Amazon mist. So There's been a bit of negativity around the stocks, but there doesn't seem to be an awful lot of up or down, really. It's a bit undecided at the minute. So it's looking very much like the DAX wants to break these highs. I was expecting much more of a pullback off of this at some point, but we don't seem to be getting it at all. It's literally just flagging and sitting up at these highs, waiting for some kind of break. When that break goes, we're going to get a big ADR day. So if this is a fake move down today, watch for a break of that high. And if that does break that high today, and we do manage to get out of these recent highs, so targets to the upside, you've obviously got yesterday's high, which is here, which is what we tapped into. You've got the weekly high there from a week ago. We're sitting around all these highs at the moment. As you can see, all three of these black lines are last week's high, previous week's high, and the 3-week high. This whole area that we're sitting in right now is the resistance. If we break this today, this thing's off. So we'll see. So he's tapped straight into that level there. You see that one there, which is this high. So we bounced into that again. Limit orders triggered. So watch this. See where we go. But downside targets is very, very hard today. You got yesterday's low, you got the previous day's low, you got the day before that's low. Obviously, we're in an ascending wedge, so every single low is a potential support along the way. ADR is here, so that is 3 days ago low ADR for a downside target. If we get down to there, I suspect we'll probably find some buyers. So, but we're at the lows, so lovely break to the downside. If you took the pre-markets today, well done. You are loaded. Proper loaded today. I'm not on that though. Just watching these US markets and just seeing how they're holding up. We've had a little bit of upside movement on the NASDAQ this morning. So it's been ticking up this morning. Dow's not really doing a lot. Neither is the S&P. So S&P's ticking up a little bit, actually. I don't lie. Right. So we'll see where this goes on the 5 minutes. So there's your 5-minute opening range. You've got 30 seconds left on this candle. We're closing to the downside. So this could be the initial opening cash balance is literally the sellers flushing this morning, and that's it. Then we're going to go and start buying and try and break that high. So we'll see where we go from here. But breakout of this 5-minute candle should be pretty safe today. If it breaks to the downside, we've got loads of room down to support levels. So we got from here, we've got sort of 45 points, 70 points, and then ADR is 86. So there's plenty of downside movement. Upside, obviously, if we break that, and then we do manage to get that high taken out, hold it. Be a biggie. US markets are struggling. Okay, it looks like it's trying to go short on that. Okay, double bottom on the 5-minute opening range. So again, that's why the offset is there, so that you don't trigger on those double bottom bounces. Okay, that's holding. See what happens with that in a minute. XRUpdate.news. Morning Amy. Morning Day Trader FX. Morning Gray. What web page are you using the company performance on? Do you mean the earnings? That's Interactive Investor. Just tells you what's coming out, basically. Not that it matters. I mean, the thing you've got to understand with this is you just need to be aware of it, because this equals volatility, right? Stocks, companies having earnings means share prices will move. whether they move up or down is dependent on individual and organization's view on what that earnings means and what their forward view is on the company. Yeah. So if a company has a bad quarter, like Google has a bad quarter and reduces its earnings, you might find that it has a quick flush in the stocks, but then they get bought up because they're cheap. Because Google's forward plan is artificial intelligence, etc., 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 and it doesn't matter whether they had a bad quarter. They might have had a bad quarter because they've shut down a profitable part of the organization to take that money and put it somewhere else. There's all sorts of reasons why companies have hits and misses. But all you need to know is that there's volatility coming and how much of it. So there was a hell of a lot of pre-market activity and a hell of a lot of aftermarket activity yesterday, feeding into pre-market activity today. So this afternoon's open, you've got all of that and all of that at 9:30 being transacted. Big moves. So whether this lot is all bullish or bearish, whether they've all had good earnings or bad earnings, you can't pick apart whether or not something's going to go up or down. But if you've got tons of it coming out and you see that opening cash balance going really big, and then the next candle's really big, you do not want to look for a buy on it today. You want to look for any kind of pullback to short it, because if that's happened, it's likely because the overall amount of the buys and sells on all of these stock sectors are driving that market down. So you just need to be aware of the volatility. The individual stocks on their own make up a small percentage of each index. So Google will have a weighting of anything up to sort of 5% of the NASDAQ. But just because that's got a weighting of 5%, and that has had negative results, for example, if that's got a plus 2, a plus 2, a plus 2, and a plus 2, and they've all had positive results, just because Google has had a bad report doesn't mean the NASDAQ not going to fly today. Yeah, there's another 99 stocks in the NASDAQ. So, you just be aware of how much activity is happening and whether or not they're big players or not. That's the key, whether they're big players. The smaller players that appear down in the bottom of the indexes are going to have obviously a lot less impact. So, okay, so we double bottoms. So hopefully you're out of your shorts on the pre-market move. I'm not taking anything on the DAX today. Personally, it's too, that opening range is big. So 35 points is a quarter of an ADR. That candle's 37 points. Yeah. So I'm not taking any trades basically at the moment, which are, if we're putting in a quarter of an ADR in one go at the open, there's too much stock gone. It makes it hard for the market to move strongly and get a breakout a lot of the time, just from what I've seen. So not going to take that one today. However, if you want to take it, take it. Just be aware we might get something similar to yesterday. So yesterday, obviously, we got a fairly similar move. The pre-market I took yesterday, but look what happened yesterday, yeah? So yesterday I took the pre-market break here because that was a decent range. Shot down, out, done within 10 minutes. Fantastic. But look what happened afterwards. Yeah, we just came up and we sat. Yeah, reason we did this is because way too much volume went in that initial cash balance. They burnt all the stock. There was no money left to transact. Yeah, that's what tends to happen a lot of the time when you get these massive candles, which is why I'm working on this new EA to sort of try and identify these situations that we can see unfolding. We know that it's hard to get a rally most of the time on these days. There will be days where you'll get a massive open like that and then it will go 200 ADR. Fine. But most of the time, if that is too big, it becomes hard to make money because there's not a lot of movement left. And most of the time, if that range is too wide pre-market, it becomes hard to make money because you can't get a high enough risk reward out of it. So these are just situations which the majority of the time are less preferential, but it doesn't mean they're not going to work. No rights or wrongs in anything. It's just trying to find the kind of ideal scenarios to try and play out. So I'm just watching the US markets as well. Right, so there's the DAX. As I say, pre-market was probably your best bet today. So there is your 5-minute ORB. We haven't broken it yet, obviously. So when and if we do, you've got an opportunity to try and get into a run out of that. But obviously your stop is going to be too big. So you want to use a smaller stop ideally if you're going to take that break, because otherwise you're going to find it very hard to get a risk reward out of it. Right, let's look at the ADRs. Well, there you go. There aren't any. Nice quiet session. So there's no ADRs. I was expecting some Australian ADRs today. We haven't had them. So we did get decent moves off of the Aussie. But as I say, they've all pulled back. So there's no ADRs yet on these. We might find, obviously, that we get a continuation rally during London. So it is negative news for the Aussie. So a pullback and continuation, obviously, as you can see, most of the Aussies are bearish at the moment anyway. So it's potentially a good short opportunity on all not Aussie pairs today to look at selling them off. Whether or not we get a lot of movement, I'd be surprised, because again, we've got FOMC. So Aussie US, for example, they're not going to want to put a lot into the Aussie US today ahead of FOMC. So today's movement you're probably going to find is very much like that. Very hard day for intraday trading and for position trading. Waiting for opportunity. There's nothing going to happen, nothing going to present itself if nothing's moving, is there? So there's no ADRs. Your weeklies, we've got Euro odd. So that's hit its weekly range. We're on Wednesday. That is Monday. So there's your high, there's your low. So we did 298 on a 276 weekly range. So your opportunity to enter was yesterday. So if you took that one yesterday, well done. There was your entry. Can't see it because it's behind me. There was your reversal alert. Admittedly, you were helped by the news. But yeah, that should continue up, obviously, if the Australian dollar is going to weaken. And the Euro Swiss, as we know. So I'm in the Euro Swiss, obviously, at the minute. It's extended on the hourly. It's just about to get extended on the 4 hourly. It's way done its weekly range already. Yeah, so that's already a weekly range hit. So this is coming down hard, this euro at the moment. So as I said this morning, first thing, looking to get into an aggressive position on this one. So when we break that area there, hopefully we'll get a little bit of a run today. I'm not looking for a massive amount. If we get an ADR, that would be absolutely spectacular. So that low there, which is the previous day's low, is just under ADR. So that is your obvious resistance. Yeah. So if we can break up to ADR and hit that resistance today, and I've got that aggressive drawdown control position on here, that profit will help reduce some of this drawdown. So that obviously if it does go crazy tomorrow to the downside, I'm just going to have less risk on it. So there's your ADRs and your weeklies. Monthlies, we've got the same as we've had pretty much all month. Where CAD Swiss hit, we know the Euro Swiss is hit, and the US dollar Swiss. So we've already looked at those. But the monthly ranges, we're towards the end of the month now on the 26th. So all reacted pretty much already. So RSIs, DAX. So we've got an inside bar now. So there's your opening range. You then put in an inside bar on the opening range. You've now had an inside bar on that inside bar. So it's a 2IB setup, 2 inside bar setup. So break of that high or break of that low is a good. So it's a way of just reducing the range size for the next range break. 2 inside bar setup is pretty much the same as the opening range breakout today. So same trade really. Looks like it wants to break short. The US indices are looking like they want to break short as well. The NASDAQ's just broken short. The Dow is trying to. S&P's just broken short as well. So just not really got any direction yet. So again, be careful today. I just think you're going to get whipsawed. Morning, Steve. Morning, outro. Morning, Wayne. I've already spoken to you. Got slipped nearly a whole ORB. Slippage on my Forex fund's terrible today. Seems like it's getting worse. Yeah, slippage is a problem with the opening range breakout strategy. This is the issue. At the moment, you've got to manually manage it. So, you know, if you see a candle, right, that's going to close like that, yeah, and this candle close here, this was your pre-market 5/15. If it's closing really close to the low of the actual candle, yeah, at the moment, what you want to do is just basically come up and hit the auto trading button and just turn off auto trading. So watch the open 5 minutes, that 5-minute candle. When you can see the countdown, when you're less than 10 seconds in, hover over that button. If that's closing strong, we've got a lot of volume coming in and it's closing at the lows, turn off auto trading because you are going to get slipped. If this candle here, sorry, I can't draw, this candle here, if that's the low of the candle and the candle's trading somewhere around here, what's going to happen is when this open happens, your orders are going to get placed as normal, but this candle's got to travel from here all the way down to there. And then even if it's a strong move, you'll still get a little bit of slippage. But if it's closing here, by the time the EA is placing the orders here, you might get slipped all the way down to there or there. And that can be 50% of the actual pre-market range or more, depending on whether it's the 5 or the 15 you're taking. And this is what my new version the new EA is doing. It's watching these levels, and you know, it's basically saying I'm skipping it today because the distance from the high low is 0, i.e. we are closing at the low, so I'm not going to take that one. And the range is either too big or too small. The range in this case today was 170, which is well within parameters, but it closed too low and that slippage would have hurt. Today, though, it still would have worked, wouldn't it? Still would have been a good one to take, but the slippage can, you know, it can wipe out. If you go for 1.5 hour and you get slipped by half an hour and it moves 1.5 hour, you should have had it, but you won't because you got slipped too far. So it's the problem. It's one of the issues with the opening range breakout strategy. All strategies have got problems. That's it. So some days it's just not going to work. Euro Swiss still coming down this morning. Really not happy with this euro, are they? Begs the question what they're going to do with these interest rates. I'm wondering if the market's had a little forward notification of what's going on with this. Right, DAX. You are breaking, really trying hard to break that low. So you might get the break. You may have been triggered into it. Depends where your let's put 6 pips. Now you're in. Okay, DAX short. I'm short on the Dow at the moment because the Dow and the DAX move fairly similarly. So I'm actually already short on this from here. See, I'm short from there. 35.58. What? Yes, different price. Totally different candlesticks. Actually, I'm short from here. Really hard to. I'll tell you what. The easiest thing to do is just show you where I'm short from, wouldn't it? That'd be much easier. There you go. I'm short from there. So that break there on the 15-minute time frame, I took that break there. So we'll run it down to watching that level there, watch that level there, and watch that level there. Sometimes I'm finding it's actually, I say in the video about the opening range breakout strategy, don't trade the US indices in the morning, you trade those in the afternoon. Don't trade the DAX in the afternoon, you trade the US indices because you're trading the volume and the volatility. However, what I'm finding is this is a much more stable, slow thing in the Globex session, which is great. When the DAX goes, this goes really orderly and it's really nice and easy and calm and relaxing to trade. It's actually quite a nice thing to trade the Dow in the Globex session. But it's literally a case of, you know, you'll take 1 trade, maybe 2. because it is obviously very, very, very slow. It hasn't got the volume and the volatility that the DAX has in the mornings. But yeah, try it, play it with it. See how you get on. What about opening range? What about opening range out strategies on stocks? Opening range breakout strategies on stocks. What's your experience with trading stocks versus indices? Why have you switched from stocks? I switched from stocks about 10 years ago. I just wasn't very good at it. It's all scalping. Stocks is all scalping. It's all intraday scalping, and I'm not very good. So, play to your strengths, basically. And stocks is a lot more hassle, a lot more hard work. Yeah, you got 5,000 plus instruments to scan and analyze every day. Yes, you can, I had scanners and stuff, but it's a lot more difficult. I want the easy life. Had to move stop to where I got filled. Said it would stop out with $5 profit, $70 loss somehow. Not sure what's happened there, outro. What do you think about Euro New Zealand? We'll have a look at that. So Euro New Zealand, obviously, at the moment, New Zealand dollar should be bearish along with the Australian dollar. So if New Zealand dollar is bearish, obviously, this will be a buy. However, for that to really be the case, you need euro to be strong. And at the moment, it's not. So you've got basically at the moment, right now, you've got a weak currency against a weak currency, which equals a range. So there's absolutely no reason to be getting into this whatsoever at the moment. You've got a lovely big propulsion gap to aim for up there, but this is either going to rally tomorrow or dump tomorrow. So again, everything that you trade this week, yeah, and I said it at the beginning of the week, everything you do this week is revolving around 7:30 this evening and 1:15 and 1:45 tomorrow, yeah? The two largest currencies in the world are having their interest rates changed. Whatever you do, whatever you decide, whatever I say today is different this evening and different tomorrow afternoon. Yeah, if I say buy the Euro New Zealand today, tomorrow I might be saying sell the crap out of that thing and don't look back. I've no idea. It's all changed tomorrow. So everything today, analysis-wise, is pointless. You can see the dashboard. Look, it's flat. There's hardly anything on it. There's a reason for that. The market is doing the same as I am, waiting. You're not going to, if you're a massive investment house with $100 million worth of orders to place, you're not going to do it now because this evening, the entire outlook of your portfolio and analysis is going to be totally different. The scorecarding system that your analysts are using is going to be saying different numbers tomorrow because the change on the US dollar and the change on the euro are going to affect every single currency. So today, Euro New Zealand is probably going to do that. These are the days you take off. There's nothing to do today. It's just, there's nothing to look at. There's nothing to analyze. Everything is going to be moving tomorrow and this evening. But the only thing you're going to be able to trade today is stocks. Really. Stocks and indices, which is why I'm on the NASDAQ and the DOW. And the DAX and the NOW. And the DOW even, if I could say it. So Dow's flushed. Watch that level. It's a bit like the DAX. There's so many levels to the downside at the moment to be aware of. Look, we're flushing to the downside. Yeah, where's it going to stop? There's so many levels that you could pick and say, right, look at this. It's an absolute minefield. This goes short today. It's an absolute minefield. Every time you see a bull candle coming, you'll be thinking, is this it? Do I get out? It's a horrible trade. If this had broken to the upside today, I'd be like, screw it. Go off and walk the dog for 2 hours and come back. This thing's going to be flying because there's nothing to stop it. There's 1,000 things to stop this going down today. It's going to be very hard for the stock market to flush today. But we'll see. So RSIs, I'll quickly cover them. Very simple. Euro Swiss, hourly. Oops. And 4 hourly. We know that. We're in it. Well, I'm in it. So just waiting for some strength to come through. As I said, aggressive position teed up and moved down. So I'm just moving that down. Move my head out of the way. So I've just moved that aggressive entry down. So the support rectangle has dropped from there down to there because we've just put a new low in. So that high now becomes the reversal alert. Good wick rejection down here at the moment. So I've just moved the order down basically. So I'm just giving it a little bit of room to trigger above these highs here. So I'm going to move it up a little bit more. Just basically to cover the spread. So if we hit this level here and bounce back off of it, I don't want to get triggered on spread basically. So just going to get triggered when we get that reversal alert. And then hope we get some kind of bullish move on Euro Swiss today. Euro Pound, we just had the reversal alert on that, in a buy already. So that is an H1 M5 mean reversion entry down there. So H1 M5, so hourly RSI extension, 5-minute entry with the EA. The entry was there. There's your reversal alert. Structure break off target on this one. How much is that? 42. That's about 3/4 of an ADR. So that propulsion gap. So that is your previous day's low, which is potential resistance on the way back up. So if we're going to continue this downward movement, we're looking for resistance on the way up to bounce from. That's your obvious level, somewhere around there. That is also a nice propulsion gap. So we accumulated, broke. So when we get back to the area, the sellers may well add into that position. So I shall be out there, which is about just over 3/4 of an ADR. So that is actually a 4-hour RSI extension, which is just coming out now. The hourly was yesterday. Euro Pound and Euro US Dollar. So that's extended to the downside. Got longs on that. 2 positions on that at the moment. Again, this is the worst thing in the world at the moment to be in, because it's the euro and the US dollar. So FOMC this evening, interest rates for the euro on Thursday. This thing could be like that this week. I've no idea what's going to happen to this week. The best case scenario for me would be for the US dollar to be talked down by the Fed tomorrow, i.e. them come out and increase their interest rates and then say, that's it, terminal rate, we're not going up anymore. That's going to tank the US dollar, which will make this pop. And then on Thursday, for Lagarde to increase the interest rates and come out and say, actually, we think we're going to need twice as much than we thought. The euro is going to pop. So at the moment, TP is there, which is 150 ADR. Highly unlikely we're going to hit 150 ADR before the news this evening. If for any reason we manage to get somewhere up here by FOMC, I will move these TPs all the way back up to those highs, because if we do get a massive drop on the US, this thing's going to fly. So at the moment, I'm targeting that propulsion gap there. There is another one up there. They've got this massive one here, but there's not enough profit in it for me. But if we were up here, for example, and in this potential resistance, by the time FOMC happens, I'll put a break even on this, just in case they rally the US. Then I'm just out of it and I haven't got to worry about the drawdown on it. So I'll watch it later and see what's happening with it. DAX and everything is it's broken to the downside, but it's just not going anywhere. Same with the Dow. Meh today. It's going to be one of those days. Lee, what do you think about Euro New Zealand? Have I not answered this one already? Someone else asked about Euro New Zealand earlier. Have I not just covered this? No? Or am I behind on the chat? I've covered that, haven't I? Yeah, I've looked at that already. Evans, morning. Can you please show your Euro Swiss analysis? I think I've already done that one, haven't I? Well, Euro CAD. So EuroCAD is pushing at the moment. So I've got longs on this at the minute. So first entry was there, which was H1, 5-minute reversal in there, looking for a pullback up into that propulsion gap. Accumulated, had a little bit of a rally, and then we had the news, which tanked the euro against the CAD. So we pushed down, second entry taken there, reversal alert there. So nice distance between those two entries. Average is there. Target moved from there down into this propulsion gap here. So looking at that, somewhere in there, basically for resistance, potentially for them to add into that short. 125 ADR. Again, I think it might be a bit optimistic, 125 ADR on FOMC day. You never know. Anything can happen. But yeah, so already in it, long. Canadian dollar, oil, yesterday we had another bull day. But we've just had a reversal out of this potential resistance area that we looked at. So this is the area we gapped up into. Yeah. So these two orange lines I've got drawn on here are designating that support resistance zone. We bounced out of it. We pushed up, we broke above it, and now we've broken back down below it. So if today we can't make a new high and we end up stalling here, I think we're probably going to have a little bit of a pullback. So if that happens, the Canadian dollar is going to weaken. So when you're looking at EuroCAD, a weakening Canadian dollar obviously is going to mean EuroCAD is going to rally. We've also got FOMC. If the US dollar tanks, the Canadian dollar will tank. This will rally. So it's all going to be based around, everything's based around FOMC at the moment. So at the moment, we're having a bit of a rally on it, which is lovely. Probably Canadian dollar weakness, I'd imagine. Yeah, so a little bit of Canadian dollar weakness coming in this morning. So yeah, EuroCAD long, waiting for a push back up into propulsion at some point. And obviously, if it does drop on the Euro news or the FOMC news drives the US dollar up, which brings the CAD down, drives the CAD up, obviously this will come down, just add in again. Target really will remain there. Might be able to move it back down into that propulsion there, depending on where the average goes to. So we'll just wait and see. Market's moving up, as you can see. So Dow's just had a big buy. DAX has just had a big buy. So this could be a pullback. So it's a bit difficult to draw the market structure in on this because it's basically candle by candle at the minute. But there's your high, low, pullback, lower high, lower low, lower high. So if we're going to continue on a downtrend today, this is where you want to be selling it. I get a feeling we might rotate. We'll see. You never know. It's earnings fortnight. Anything can happen. At the moment, though, nothing's happening. So, EuroCAD done. Can you please show the reversal indicator on the M5 for the DAX? Yeah. US dollar yen. So US dollar yen. At the moment, I've got a sell on this, looking to target this propulsion gap down here. Let's see what profit I've got on this actually at the minute. Obviously, US dollar yen at the minute is an H1 M5 beam reversion from there into propulsion. So this area here is potentially going to act as a support area. Failing that, maybe there, or obviously into that propulsion gap is the ultimate, which is ADR today. So again, I think it's going to be very difficult to DAX is just breaking out, Dow's breaking out the highs. Dow's just taking the highs out. So yeah, I'm undecided on this one at the minute. I'm short at the moment, but if we are again, same with everything US dollar related, and anything basically this afternoon. If we're sitting around here late afternoon, this will be banked or broken even, depending on how far away we are. Bear in mind what's going to happen with the US dollar, with FOMC. What we tend to get on FOMC is one of two things: an unexpected result, which drives the market in one direction and it holds. Then it hovers, waits for the press conference, and then depending on what's said, will either continue that rally or undo that rally. Or we get an as expected result and the market does the same thing, or it whipsaws while we're waiting for FOMC press conference. And then when they know what's going on with the press conference and forward guidance, we get the movement in one direction or the other. So if you're in something here, let's say we're 15 minutes ahead of FOMC and your entry's there, your options are bank that, put it there, make it green, guarantee that that money is in your pocket, or take the chance, which is 50-50, on whether or not they push up, stop you out, break even, or push down and hit your TP. It's down to you individually to decide what you want to do. And me, I will decide based on what my day's like. If my day's like that, I'll be going, screw it, let's just bank all this, make sure we're back to break even for the day. Worst case scenario, it all flies and I could have made a load more money. But at the end of the day, I haven't lost anything today. Worst case scenario, it all flies back against me and I'm like, I haven't gone into drawdown. So you've got to look at it on an individual basis. It's what your P&Ls look like, what your drawdown's looking like, what your thoughts are on the actual instrument that you're trading at the news. But right now, I've got a profit on it on the H1M5. So instinct tells me at the moment that's what I want to be doing. Because if this is sitting around and we're in this sort of situation, there's not really enough money for me to bank there. It's going to be like 0.8% or something. It's just not really worth banking. But then again, I'm not going to let it go into drawdown if the US dollar rallies. So that's basically what I'll do with it. But either way, your decision is going to be made for you this afternoon at this evening at 7:30. It's either going to come down here or it's going to go out those highs, or it's just going to whipsaw and be exactly where we are. One of those three things is going to happen. Sorry, I can't be any more accurate, but I haven't got a crystal ball. So yeah, that's my view on it at the minute. That's what I'll be doing anyway. If you haven't covered Aussie dollar yen, H4. So I'm just watching this Dow. Just taking that high out. That reaction there says to me that this wants to go long today. Yeah. Basically, that speed and the velocity of that movement there from that low tells me that that is basically, we know that the buyers stepped in there multiple times. They've just stepped in there, like proper stepped in there to drive that all the way back up there. And this is bullish at the minute. So this looks like this is going to break to the upside today. So if you are in the DAX short, you can get clues from what's going on in the US indices. The US indices look like they want to drive at the moment. The DAX is obviously coming down. What it means is that it's going to be harder for the DAX to drop if the US indices are rallying, because obviously the stock sectors are going to be purchased long in the US indices, which means it's going to be very hard for you to sell a load of stock in the DAX. So you might find that we get a little bit of a resistance to going shorter here. So just be careful out of this propulsion gap. If it does bounce out of this propulsion gap and you are short on it from here, you might get stopped out on that break even. So Aussie dollar yen, but we'll see. They might pull back from there. As I say, it could be complete range bound chop fest today. So at the minute on the H4, obviously, we're just sideways. It's not going anywhere. There's no RSI extensions in any shape or form. Last entry you would have been there. As you can see, there's my buy. You had an entry there as a sell, but that was on H1. So H4, it's just sideways. Going nowhere, doing nothing. Moving averages are flattening out. Dead. Looks like a short in play. I don't see a short or a long. I see a range. Not going anywhere. Not from a mean reversion perspective. Yeah, I mean, there's absolutely no reason. Yeah, if this is your range low here, that's your range high. You're right in the middle of there. Which way is it going? There's nothing, is there? There's nothing to tell you. Look at this wick. And then look at all these wicks. And look at these wicks. Yeah. Equilibrium. Buyers and sellers are totally happy in this level at the minute. No idea. Wait for an extension. It could be going like that. And again, it could just carry on going like that until it gets back up there. I don't know. Right now, though, the important thing to understand is the banks are flat. The banks are flat. There's no reason for them to move it. So it's going nowhere. CAD Swiss. So CAD Swiss pulling back at the minute. Again, there's nothing going on this. Last entry was there hourly. Same thing, really. I mean, the Swiss. This is anything that's got the Canadian dollar in it. Read US dollar. Anything that's got the Swiss franc in it. Read euro. Yeah. This evening, tomorrow afternoon. Yeah, CAD Swiss will rally with the US dollar today. The Swiss franc will rally with the euro tomorrow. Again, market's doing this at the moment because it's not going to move until we get the news. So, you know, I mean, I've said it all week this week. There's just so little point in doing analysis, and you can always tell when we're waiting for something to happen because all the dashes go flat. The market's contracting, waiting for something to happen. And as soon as that news comes out, all the analysts are going to scurry around, go to their buyer scorecards, reanalyze everything, tell the traders to go long or short based on what's just happened with the interest rates. So, you know, at the moment, this US dollar is 5.25. We're going up to 5.5. Yeah. Is this the terminal rate? This is the question everybody wants answered in the press conference at 7:30 this evening. Are we there yet? Or we're like kids in the back of a car. Are we there yet? Are we there yet? No, we've got another quarter of a mile to go. Or, yep, we're there. And that is going to be the difference between that, or that. Those two will be based on that. That one, kiss the US dollar goodbye. So you can't make any decisions on anything based on US dollar or Canadian dollar at the moment. Same with the euro. We're going to 4.25. We're steadily increasing in 0.25% increments. If Lagarde comes out and says we've got another 2 of those left, euro's up. Swiss franc will go up. Yeah. So very hard to analyze any of this at the minute. But when that move happens, you'll have a mean reversion opportunity. I don't think we're going to get to squeeze level on these news events unless they basically tell the market that the US dollar is not going to have an interest rate increase again this year. In which case, then I think, yeah, you might get some really strong continued movement downside on the US dollar. In which case, if you want to buy anything, gold. This thing will fly. So tricky. It's very, very tricky today and this week until tomorrow and Thursday. You know, this week is kind of one of those weeks where you just think you're better taking it off. Let everything play out that you've got running, but, you know, just check your P&L every 4 hours. And if you got stuff green, bank it and wait for everything to get green and bank it, because this entire week is full of potential market shifting events. We've got the Bank of Japan on Friday. Then we got the Canadian GDP and the PCE and unemployment for US. So, it's just nuts news all week, which doesn't help anybody, which is why the market's flat. And if the market's going to be flat until all of this is ironed out next week, we'll see a load of movement coming in. But it might all start today, We've got the rates on the Aussie as well. They're freezing rates again. So their inflation has just come down 0.8 on a forecast of 1. So they've done a 0.2 decline on their inflation, yet they're not increasing their interest rates. It's nuts. The Aussie dollar just, this is at 6%. It's the second highest in the world, joint with New Zealand at the moment. They didn't increase their interest rates last time. They're not going to increase their interest rates this time. Their inflation is one of the highest in the world. What planet are you sitting on that you do not want to improve that? Yeah, your unemployment's frozen. Good. While that's not moving, make the most of it and get that thing down. They're not doing it. Aussie dollar, bye-bye. It's just not, but until we get confirmation of all of this, it's all speculative. Everything's speculative, obviously, but until we get this confirmation, and we've got to wait for all these news events to come out, the market's just going to sit there and wait because it's too risky at the moment to dump loads of money in. And then obviously got non-farm payroll next week as well. So busy couple of weeks coming. Okay, I flipped along on the Dow. So DAX, if you are in, as I said, watch this level for buy. So it's just nasty today. But the Dow has flipped long. So I'm long on the Dow. So I've been stopped out on the short entry and I've flipped long. So I'm going to see if I can get a run on the Dow to the upside today. The DAX is just stuck. So DAX upside target, obviously, as I said, if we do manage to get out of that high, we will get a good rally on the DAX. So, but the Dow is obviously absolutely flying. It's rallying like nuts at the minute. So yesterday's high run today would be lovely. So just watch. That's well within ADR as well. Look at the ADR on this. Absolutely no problem hitting that today and off up to there. So I've got a nice long on this, which I'm just going to hold all morning and see if we can get a rally up to the highs. If it decides just to mucks about. But if we can get up to here by the New York Open and they buy all the stocks from the earnings yesterday, we're going to have an ADR day today. So it's a nice one to hold long for a potential speculative move. But not a lot, is there? Again, market's not interested in buying or selling a load of crap until it knows what the price of the US dollar is going to be moving forward, because it might be you want to wait and buy your stocks later. If the US dollar is going to tank, everything becomes cheaper. Everything makes more money. Think about when you're buying stuff. If you're going to go out and buy a bag of apples, right, you're not going to think much about the price difference. If you're going to buy 1,000 bags of apples, you might want to have a look at what the price of apples is forecast to do over the next week, because if it's going to go down, you're going to want to buy your apples on Friday, not today. Same with the stocks. Yeah, if the US dollar is going to have a bad FOMC and 2 days it's going to collapse, you want to be buying your stocks on Friday, not today, because everything's priced in dollars. Yeah, so you buy your stocks cheap when the earnings have come out and the market's dropped, and then you buy them when the dollar is actually cheaper, so you're going to get more stock for your money. So it's all interconnected, which is why we're seeing that flat line. And we will continue until we get some news. Right, that's all I've got for this morning because there's nothing happening. So we'll just watch those. Everything I've got on at the minute, I've got some bankables at the moment. Done 0.91 drawdown control today. I can bank 2, 4, 6, 8. I can bank 1% now and bring that back to green and flatten this lot, basically, pretty much. But I'm going to see if we can squeeze a little bit more out. So pound CAD is going okay today. We're up at the highs, though. So target on this is here. I'll run through my trades quickly, actually, before I go, because obviously it's useful. So pound CAD targeting propulsion. We've broken that high. We've got this little high here as a potential stumbling block, but this is well within ADR today. So might get a move on that, which would be nice. So might get that over the line today. Pound US dollar, doubt that'll get much. But if we get a rally on the pound, fantastic. But 125 ADR, which is target, unlikely. But as they say, same thing. If this is up here this afternoon and about 5, 6 o'clock, we're hovering around here, that will come off. I will bank it. And then I've just got the one position to worry about. If it then flies, great, I'm out. If it tanks, I can add it back on again. Yeah. So just, you know, anything that I have green that is over 0.2, 0.25% will all go here ahead of FOMC, because I want to make sure that I have it and I don't lose it and go into drawdown on it. Because the worst thing in the world is watching 1%, which you could have sitting there, fly away on news and become a negative 1% drawdown. Just get it in there. You can add it back on. This position here, if it's up here and I take it off and it comes down to here, I can add it back on again and wait for it to go up again and bank it twice, make twice as much money on the same movement. Yeah. So get it in the bank if it's up there, if you get the opportunity, that is. New Zealand dollar CAD. Just got the two longs on this one. Again, same thing. Canadian dollar will move with the US dollar. If we can get up to here today, I'm out of the entire position. Nice profit. If we're hovering around here, I'll make a decision. I might bank it all. I don't know. It depends what the profit will be, but that will definitely come off. And then I've just got the one. So New Zealand CAD and pound US dollar, very similar situation. US dollar yen, just got the one short on that. Yeah, same story. If it comes down, I'll be out of it later. Euro US dollar, this is the same as the pound US dollar. Pound's having a little bit more strength today. Euro's not doing too bad today, so we might get a continuation push. If this is up here, again, that one will come off. I will leave that one on. That level there, as you can see, support, resistance. Yeah. So if we get to there and we start a little bounce down, it depends. I'll see what the P&L is like. If this is sitting in like 0.8% or 1%, I might just bank that and go, right, just if it's 0.2, if it's 0.2% gain or something silly like that, it's better to have it there and have virtually no drawdown ahead of FOMC and the euro rates, isn't it? Might as well just get flat and go, yeah, fine. If it goes up to there, yeah, I could have made 1%. If it goes down to there, I'll be glad. So I'd rather be glad than 1% in drawdown. Euro pound, long on that one, single position, target and propulsion. Wait and see what happens with that today. US Swiss, we know about this one. Aggressive drawdown control position in place, ready to go. So there is my aggressive entry, hoping for a positive move ahead of FOMC. It's only 2.5% in drawdown. It's kind of on the cusp of shan't I bother doing aggressive on it. I'm 5 positions in, around about where I tend to think this is not pulling back. So see if we can get out of it. But it's not massively in trouble. However, it has got the potential to be in trouble tomorrow, depending on what happens with euro rates. So I just want to see if I can deal with it today before the rates come out. Euro CAD, got a long on this one at the moment. Target and propulsion. Again, if we can get anywhere up to here, that will come off and be banked. We'll deal with that later. It will either go up and I'll be out. Also, I'll probably move the TP up onto that high for that one. Might leave it where it is, don't know. See what the P&L's like. But if it comes back down again, obviously I can add this one back on again and get in again. Aussie New Zealand. So got shorts on this one at the moment. Not worried about this. Now that I've just seen the Aussie forecast for next week, don't see any reason why this should not be coming down. If the Aussies are not going to put their interest rates up on that inflation figure, they're nuts. So inflation's coming down, which takes off interest rate pressure, which is negative. So inflation's coming down. They're not going to increase their interest rates. They've got less pressure to increase their interest rates. There's not one positive arrow there, is there? So the only downside we've got on this one is the New Zealand dollar has this nasty habit of being weaker than the Australian dollar. So even though the Aussie dollar might be collapsing, the New Zealand dollar has a habit of collapsing faster than the Aussie dollar, meaning Aussie New Zealand actually goes up. As we know, as my favorite example of the recent couple of months is what happens. Aussie dollar, New Zealand dollar has positive news, collapses. Aussie dollar has positive news, rallies. New Zealand dollar just collapses when the Aussie dollar rallies. Double pain. Yeah. So, you know, it's one of those pairs. 90% of the time, it's absolutely fine. Occasionally, it just goes into turbo overdrive nuts, which you can't tell. But that instance there, that propulsion gap, was caused by the Aussie dollar interest rate. They're not doing it this time. The only downside on this is if the Aussies decide, actually, no, we're not going to do a 4.1, we're going to do a 4.35, then that is going to go up. So that's the only sort of fly in the ointment with this one at the moment. So we're forecasting 4.1. You can see they've done it twice to us, yeah? We had a 3.6 forecast stable, we got 3.85. We had a 3.85 forecast stable, we got a 4.1. We got a 4.1, actually we got it. They're now saying a 4.1 again. This could go to 4.35. That happens, the Aussie's going to rally. So this is next week, obviously, next Tuesday. So we got a bit of time. We got a week to deal with this. So I'm not particularly concerned at the moment, but would be nice to be out of it by next Tuesday. Then not have to worry about it. Yeah, there you go. So that's the positions I've got on at the moment. Tom, when altering TPs closer to break even, if you're in multiple positions, do you have specific requirements when choosing a price to move them to? Yeah, so propulsion gaps. So Euro Swiss is a good example. So initial entry was here on the H1 M5 mean reversion. Target was initial target was there. Yeah, that low. So always, so if you're using the market reversal alerts EA, you set a target. You set a financial target or you set a price movement target, either a percentage of ADR or an amount of money. Yeah. So those are your two targeting options. I'm targeting manually at the moment because it just makes more sense to try and squeeze more out of the positions. And I have the time and luxury to be able to do that. So I'm always targeting roughly an ADR of movement, somewhere between 3/4 to an ADR of movement, Euro Swiss RSI extension, which we know about. So target was there on that entry, which is roughly 50 pips, which 53 is ADR, that's 49. Yeah, so roughly an ADR. You'll always find your target to the nearest propulsion gap or support resistance will be about an ADR because the market moves in ADRs. We know this. This is why we have the ADR indicator. We measure everything in ADR because everything moves 58% of the time within its average daily range. So it makes sense that when you get into a position after it's pushed in one direction, your target that it broke will be roughly an ADR away. That's why we use 3/4 of an ADR as standard in the market reverse alert CA as our target. If you're targeting within an average daily range, it's easy to hit because 58% of the time the market does that. The odds are in our favor. So I always look for support resistance. So that entry there, target there. We pushed down, we got a second entry on, we had a new propulsion gap form, so the target becomes that because the average of those two is there. So that's a nice easy exit. Pushes down. Now, when we got to here, there was a tiny little propulsion gap put in, but nothing else. So target remains the same. We pushed down into here. There was a target there and a tiny target there. But the average would have been somewhere around there. Couldn't make profit. So the target remains the same. Then we pushed sideways for 2 weeks and finally broke down into here. Yeah. So you can see my average is currently here. That is the obvious propulsion gap fill, but we've got a resistance in the way potentially. So this high here, this propulsion gap fill is easily achievable, but the profit is tiny. I've been sitting in this thing now for 12 days. I kind of want a little bit more than that. So that is where I'm still targeting. And there's every opportunity for it to hit that as long as the euro rates go up and as long as Lagarde talks the euro up in the press conference, we should see a bull move start. Look at how far this thing's dropped. Yeah. And look at where my target is. Yeah. And look at what happens in a trend. We pull back into the 72.24 zone on the daily. And look at how far away we are from the 24. Yeah. So there's every opportunity that the price can get back up into here. However, I will judge what price action does when the news is released and decide accordingly. If we can get up to there, that would be lovely. Just extrapolating these moving averages out into the future. Somewhere up into the 24.72 area is where we tend to bounce. Yeah. So that would be a very easy target. That is a 50% retracement roughly on that entire leg. Yeah. So that's what I'm looking at. And this is why you use multi-time frame analysis in your trading. Every time frame, you'll see a different picture. And as you get into a position, you get deeper into a position, you've been holding it for a longer period of time. So you need to kind of step back and scale out and look at the bigger picture for the next swings. Yeah. So that is where we should be swinging back up into. So probably won't achieve that target. May do, may not. But my average at the moment is sitting here. So that's too close. But again, depending on my situation at the time we get to this level, right? So let's say, for example, today it goes up to here and I decide, actually, I'm going to put that aggressive drawdown control to break even because I've banked a load of money on something else, or this P&L's just suddenly dropped below 1% or whatever. And it pushes all the way up to there. My break even is going to be down here somewhere. Yeah, and it could easily do that tomorrow on the euro announcement. It could do that today on FOMC. If FOMC comes out as a negative, let's say, for example, the US freeze interest rates this evening and go, actually, no, we're not going to put them up. We're going to freeze them. And we don't think we're going to put them up again for the rest of this year. US dollar is going to collapse. They're going to pull money out of the US dollar. They've got to put that money somewhere. They will put it into other currencies they believe are stronger. The euro has got a rate increase coming tomorrow. So it makes sense, well, let's buy a bit of euro and the euro will pop. It also makes sense to put it into the Swiss franc because that is a holding platform, safe haven for you to put your money into when you're unsure where you want to put it. Now, if they put all the money into the Swiss franc, what's going to happen to the euro Swiss? It's going to go through the floor because the Swiss franc is going to suddenly get an ADR move. This thing's going to come down twice as hard. So again, this is the relationship you need to understand between all currencies and how this market, all the currency markets move. There's always two players involved. And you need to think of the what ifs when something is going to happen. So those are the scenarios that I can see playing out. And my targets will be moved accordingly. And if I get up to there, let's say, for example, I'm not going to take this aggressive move, this aggressive drawdown control today. If it gets up to there and I'm sitting in 0.6% profit at that level, right? It owes me on drawdown control. We talked about this terminology. That's wrong thing to say. It doesn't owe me anything. What's happened has happened. I've taken a 1, 2, 3, 4, 5. So I've taken roughly 0.9 drawdown on this overall. Yeah. So it owes me 0.9% if you want to use that sort of talk. If I make 0.6 out of this, I get out of this position with a negative 0.3% loss. However, I've banked this week 1.3% in total so far, and that will probably be something like 2.5% or something by the end of the week, or maybe more. Don't know what's going to happen, do we? It doesn't matter, does it? So I might get out there. But as I said yesterday, I'm always looking for where the market can go to. I'm not interested in money. I'm not interested in making, holy shoot. Thanks for that. DAX has just collapsed through the floor. So is the Dow. Just short of the Dow. So yeah, not interested in specifically, I need to make X amount of money or I need to make X% increase on my account. I'm interested in where is price likely to go. We know propulsion gap targets work because that's what the market does. It moves from propulsion gap to propulsion gap, filling them. So we know there's a big one there. We know there's a big one there. So if that is above my average, that's where I'll get out. If I get to here and we've got news coming out in an hour and I can break even it and take a punt, I'll take a punt. I don't know what I'll do, but it will all be dependent on what is happening at that particular time. Yeah. So that's how I move my targets around. But if you use the market reversal alerts EA on full autopilot and you just set a target of 3/4 of an ADR, it will just get you out 3/4 of an ADR. Simple as that. And it will just continuously bank 3/4 of an ADR on everything. So you'll make 1, 2, 3, 4, 5, 6, 7, 8, 9 times 3/4 of an ADR at some point when these all pull back into their pullbacks. That is it. But the trouble with that is obviously you're limiting your upside. So the amount of money you make is going to be dependent on how many pairs you've got on. And so 9 times 0.75 ADR, you're going to make 6.75 ADR. So if you're risking 0.25% per trade on half an ADR, you can do the maths. That's what you'll earn. However, if along the way you've done drawdown control 6 to 7 times on all of these instruments, you need to deduct that from there. So you can see how it limits your upside. By not using a target and targeting an area that price will get to, if that happens to be 1.5 ADR away, I've just doubled my profit on that particular position. So, you'll hear it everywhere, and quite rightly so. Limit your downside, cap your risk, but do not cap your upside. That's what happens with the opening range breakout EA. Yeah, this is the edge of the LLB EA is cap your downside. Yeah, so there's our 15-minute pre-market range. Stop above the high, take that break. Maximum I can lose is that. This thing could go 3 ADR to the downside today. Don't get out at 1.5 ADR. Get out with some of it maybe, but have a runner. The runners is what makes the money. And if this can run all the way up to there, and I get an aggressive drawdown control position on, and I find we've had 3 hourly candles up to ADR today, my average has dropped down to here, damn right, I'll let that run. That could be a 6-7% profit. I've had a 9% profit this month on one position. You take what you get. The market pays you. The market allows you to take money out of it. It designates what you earn, not you. Yeah. If you say, right, I'm going to get in on this trade when that reversal happens, my stop's going to be there and I need 3R. The market wants to go 1R and then drop, you will never hit that. Up to the market, what you make. It's not up to your risk reward profile, which is why so many people get frustrated with systems all the time. Oh, it looks really good in back testing, making 1.5R, but I can't seem to get it. No, because in back testing, 1.5R worked. In forward testing, completely random market that's never been seen before that has got nothing to do with that, 1.5R doesn't work. If you'd have taken 1.46R, you'd have been profitable. Why? Because 1.46R was there. 1.5R was there. And what we're going to do is a support bounce, turning to resistance at the previous day's low, because there's a low limit orders there. But your EA, your strategy, back testing, needed 1.5. So you made a loss on that. If you'd have taken 1.46, you'd have been a millionaire. Target where the market's going, not what you want. That's the key. And this is why, as I say, we use the ADR indicator, because we can see on average where we're going to get to. So if my target, you know, this US dollar yen is a good example today. Look, my target is there. Why? Because there's a propulsion gap, and we know propulsion gaps get filled, and it's within ADR, which we know 58% of the time we will achieve that movement. So there's a 58% probability of hitting that. There is a 12% probability of hitting that. I prefer 58% to 12. Both of them make me money. That one makes me probably a third more. But I like money. I don't like lots of money with risk. I like lots of money with ease of access, if you like. Think of one of them like a current account, one of them like a high interest savings account. You can't touch your money for a year. Target the current account. Yeah, Dow's collapsed. So yeah, nice break to the downside on the, sorry, DAX has collapsed. Nice break. All indices have just collapsed. Should have a look at why. I didn't go over the news, did I? There wasn't much this morning. That's probably why I didn't do it. It was all earnings related. Spotify shares fall 14%. Alphabet 7% increase in revenue. Snap shares plunged 16%. Yeah, market's down. Alphabet better than expected quarterlies. It's the Australian CPI. It's a bit Japan news, which wasn't important. Happened, isn't it? 9 o'clock. That was the Eurozone M3 money supply. Still in decline. So watch this here. So this is yesterday's low, which we're at. There you go. Bounced straight off. That's a perfect example of a limit trigger. Yeah, limit orders will be placed at yesterday's low. Market hits them, bounces off because those limit orders have triggered. So now it's a case of how many limits have we got sitting here? How many iceberg orders are being added into that level? And are there more sellers than orders being placed in at that level now? If it breaks, we flush. If it doesn't, we bounce. That's how it works. So right now, you've got a really good buy opportunity with a very tiny risk, wherever you want to put your risk at. But look at that risk, whatever it may be, and look at the potential reward. If that holds, where are we going? Risk reward, taking the opportunities that have the available risk reward. Don't take it just because it's a bubble bottom bounce. Take it with a stop that actually makes you a fortune. Big risk, big reward. Well, not big risk, but small risk, high reward. You know what I mean? Take what you can and remember, market owes you nothing. Exactly. What's happened has happened. Lloyds Bank reports major defaults loss on mortgage lending, just reported in Bloomberg. Well, Lloyds Bank's in the FTSE, so that wouldn't affect the DAX necessarily. But they might be flushing the banking sector on that news. So yeah, that could be part of it, Franco. But I'd say it's probably more likely the M3 money supply. Because that came out at 9 o'clock, which just happened to coincide with when that drop happened. So makes more sense. It's the M3 money supply report. But yeah, we'll see. Right. I'll leave it there today. There's that bounce. Look. Boing. US dollar yen, and just seeing that bounce off of that high as well. I'm contemplating taking some money, but I'm not going to. Right, I'll leave it there. I'll be back this afternoon at 2:20. We'll trade the US session, see how we get on with the US. If you're in the DAX, well done. Just watch that bounce. It's a really good bounce, that DAX. And as I say, you know, this is what I was looking at this morning, wasn't it? Yeah. To the downside, we've got so many levels that we will find support at. To the upside, when we break that high, there's nothing but clear air. So market's going to find it very hard to sell off today because there's so many buyers in the market driving back up again. So there's a lovely example of that in play. So potentially nice little bounce play all the way back up to the highs again. So I'll be back this afternoon, 2:20. We'll watch the US session unfold. News-wise today, obviously nothing. We've got the housing at 3, I think it is. Yeah, new home sales at 3, which is not going to do anything, not to worry about. And then obviously FOMC this evening. So we'll just prepare for FOMC really, which is literally just a case of looking at your P&L, seeing what you got in profit, banking it. That's about it. With all the recent mergers and acquisitions, is making money tight due to bad bank investments? I have no idea. Banks make an awful lot of money on mortgages, mortgage lending. And we know there's a massive problem with the housing market at the moment. It was reported on the news this morning, actually, in the UK, that the house prices are actually going back up again. So on average, the estate agents are reporting that there's 20 more people viewing houses per house, 20 more viewings per house than there was previous quarter, which means that there is less supply of housing stock, which means there are more people also looking to buy houses, which means house prices go up, not down. We're anticipating a housing price crash because of the mortgage problems that everybody's having. What's actually happening is people are selling their houses because they can't afford their mortgages and downsizing, which means that there's a massive supply problem in lower level housing, and upper level housing where people can afford is not a problem because people can afford it. Yeah. So it's actually driving house prices the opposite direction, which in itself, if you think about it, is making that bubble bigger. So that's in the UK. I don't know what's happening elsewhere, but if the banks are finding there's lots of defaults on mortgages, this is what's happening is people are defaulting on their mortgages because they can't afford that price point. So they have to buy a cheaper house, which makes the housing market go up, which again adds to that spiral. Like I keep saying, I think this, you know, this precipice that we're sitting on at the moment, we're just at the start of this potential financial collapse coming. There's so many things at the moment which are unbalanced. Banks absorbed a lot of paper debt. Yeah, I mean, it's just one of those things at the minute. I think you've got to be just very, 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 very careful of everything. You know, there's so much uncertainty with everything in the world at the moment, and that is always going to be reflected in these markets with lack of movement. You know, this is what we're seeing at the moment with things like the US dollar. We're seeing the US dollar coming down when we get good news. The market has just got no faith in things. So we sit around and we wait for what we hope is going to happen. When we don't get it, it goes wrong. This is what I'm saying with this interest rate today. We're waiting for the Fed to turn around and say, nah, not going to do any more increases. At that point, this thing's going to accelerate so fast. And that is just going to cause problems everywhere across all markets, which is great because it means lots of volatility. But what we're doing is at the moment waiting for this thing to pop. And I don't know, it just looks like to me we got a lot more problems coming. But as I said the other day, if you're trading in Forex, it doesn't matter, does it? I don't care what happens. It can go up, go down, you can go sideways. I'll make money. Yeah, recession-proof industry we are. It doesn't matter if the housing market collapses. Doesn't matter if the stock market collapses. I'll just sell it. Good, isn't it? Good job to be in. Right, I'll leave it there. Anything you need, let me know. I'll be back this afternoon, 2:20. Back tomorrow, 7:50, same time. Anything else you need, I'll be in Telegram. Have a good day, and I'll see you this afternoon.